But today we're going to look at silver and also at gold, but in particular silver. I think silver, as I said a couple of weeks ago, was on the cusp of catapulting towards 50. And yes, it took quite a few years to break 30, right? We tested 30 back in 2020, 21, and then it was only a year or so ago that we're able to break out of it. But now it's accelerating, and I think what it means is that the current fiat currency monetary system, banking system, is under threat. Yes, silver is very important, and we're going to look at a few things in relationship to that. But the other thing that I see is that silver might save us. And what do I mean by that? Well, it might save us from the globalists out there, the people that run the World Economic Forum, the people that run the UN, the Agenda 2030, the people that really want control over you, the people that are part of, they are really a representation of European aristocracy. But what's that got to do with silver? Well, I think silver could blow them out of the water, figuratively, of course, because no one really cares about silver anymore. No one realizes how important silver is and why they've been suppressing it for almost 50 years now, since 1980. Well, it's because silver is the money of the people, really. I mean, gold performs well, of course, and is doing very well, but it's more their money. It doesn't mean to say you shouldn't have any gold. But, and I'll give you an example of how great silver is as money and currency. So I've seen this meme before, and I saw David Bateman, the billionaire who's bought a lot of silver, talk about how the minimum wage in 1964 in the US was $1.25. And in 1964, the quarter, which I have one here, and this one is from 1964, right? A quarter. Used to be a silver, it's silver, 90% silver. So after 1964, of course, there's no more silver, unfortunately. And it also happens to be the year I was born, 1964. So yeah, $1.25. So 5 of these was the hourly wage, minimum wage. So now with silver at 46, yes, we closed just above $46 yesterday, the spot price. And I was surprised in a way how quickly silver is going, even though a couple of weeks ago I said silver was on the cusp of catapulting towards 50, right? But anyway, at current prices, these coins are worth about 8 fake dollars, right? Because we don't really have dollars. The dollar is supposed to be a weight of silver and a weight of gold. So we have fake Federal Reserve currency. Well, yeah, 8. So you can get 8 of the fake dollars for this now. So you multiply 8 by 5, you get $40. I don't know what the minimum wage is in the US, but it's probably a lot less than $40. So that's what I think this massive bull market in gold and silver is going to expose. It's going to expose the fraudulent nature of our monetary and currency system. And it's not even a bull market. Well, kind of is, I guess, a bull market in gold and silver, but it's more of a collapse or a massive bear market in the fiat currencies. And we're going to look at some charts in a minute. The 50 level, of course, is really important. So I'm going to bring up some charts now. And I think this chart here is telling me that silver is really on its way. And this is the silver price as a percentage of the gold price. It's the gold silver ratio in reverse. And I spoke about this, or it was Michael Oliver who came on the channel about a month or maybe a little longer ago and said that we needed to break out above like one, yeah, 1.2, 1.3%. And then I've been tracking it and I've spoken about it to you guys, yeah, in the past few weeks. And this is a weekly chart, and now you can see that we're really breaking out here. I think when I spoke about silver a couple of weeks ago, we hadn't broken this trend line, and now it's just blown right through it. And so, why is this important? Well, because since the 70s, when the dollar went rogue and became unbacked by anything, there's been bull markets in gold and silver. The 1970s bull market that peaked in 1980, and then the early 2000s or 2000s bull market that started in 2001 or thereabouts and peaked in 2011. Silver always lagged in the beginning, but towards the end of the bull market, silver led the way, and silver outperformed gold massively. And we've been waiting for this for the last 4 or 5 years. And every time it looks like silver is going to start outperforming, it doesn't. And then it kind of has kept gold a little bit under control, but not until not I would say in the last year and a half. But we needed silver to confirm this, and I think what this will mean, of course, is that silver is gonna, and especially also the silver miners. They're going to go crazy. It doesn't mean to say that gold is not going to do well, but yeah, silver is going to do a lot better. Does that mean I'm going to sell my gold and buy silver? No, I just try to add on to both. In terms of the miners, I would say, yeah, have some. Yes, there is the danger of a great taking. You might be able to get your share certificates from your broker, even though that's becoming more and more difficult. You just need to, I would say, be aware of the risk and manage the risk yourself. I mean, the miners, to me, what I put into it was a small percentage of what I have in physical gold and silver. Now it's becoming a much bigger percentage. Yeah, there will be a time where I'll take profit on those miners, but I think it's still early days. So yeah, this is really important because it means that silver is going to take off relative to gold. This is what this chart is telling us. This is the teacup and handle formation, which I told you about. We're breaking out the end of the quarter. This is a quarterly chart. The end of the quarter, of course, is on Tuesday, and it looks like it's going to be the highest closing quarterly price for silver ever, and that's why I think the 50 level is very important, of course, because we got close to that level, 1980 and 2011. So it's the line in the sand. But if silver can stay above this line until Tuesday, and I think it could, there's a good chance, then look out above. And as I said, it's going to confirm the failing nature of our monetary system. And Yeah, you need to hold on to your gold and silver for dear life, as I've said many times. Yes, you can try to trade in the futures or ETFs, but that's a dangerous game. I think just holding on to your miners will go a long way, and even just holding physical is going to go a very long way. You shouldn't be greedy with this. I think there's plenty of gains to be made by holding physical. So yeah, this chart, what it tells me, this teacup, this is the price suppression that we've had since 1980, and it's now yeah, the bullion banks in London and New York and Europe are losing control of it. What do we got here? Oh, yeah, the dollar index. Yes, it is kind of struggling to stay above this trend line. Yes, it could rally the dollar. Some people think if there is geopolitical event in Europe, the dollar could rise. And I don't think that would be negative for gold because look at the lowest level ever in 2008. And I remember exactly, it was in March 2008 when Bear Stearns had to be taken over by JP Morgan. And gold actually reached an all-time high of $1,032. Yeah, 1,032. And the dollar index bottomed at 70.69. So ever since then, the dollar index has been going up, but gold has gone from $1,000 to almost 4,000. So gold and the dollar are not inversely related necessarily. So yeah, that's how I see the dollar index. I wouldn't really put too much importance on the dollar index because it's just measuring the dollar against other fiat currencies that are also collapsing versus gold. And we're going to look at that in a minute. So now I've got the Dow gold ratio, and that's telling me that there's trouble in the stock market as well. Because after the bottom in April, yeah, the stock market has been rallying, and the Dow rallied against gold, but it formed a rising wedge, which is bearish, and we've broken below the trend line, and now yeah, the Dow is accelerating lower relative to gold. And eventually, I see this ratio, of course, going to at least 1 to 1 in the next few years. So let's continue. This is just a chart of the price of gold going back to the early 70s. It just goes to show you how we're still in the early stages of this breakout. Yes, last year I was looking at 2,700, which was around here. Yeah, we blew through it and then it retested it, and now it's gone back up above it. And yes, this chart is just very bullish. So let's keep going. Well, I've talked about the price of gold in yen. It's only a matter of time that we reach 600,000. So as I said, all fiat currencies are sinking and they're all going to buy a lot less gold, which is a bad thing. It means they're becoming more and more worthless. This is the price of gold in pounds, which closed above 2,800, 2,805. I think the high was around 28, 25 actually. But it's the same setup. I mean, all these currencies are going down the drain, unfortunately. Well, actually, it is fortunate because that means hopefully that these politicians and stooges will have a lot less power. And I'm not sure they're aware of the fragility of their monetary or fiat monetary system. This is the euro. The euro is blew right through 3,000. We're now at 3,200. And even the venerable Swiss franc closed above 3,000. Yeah, gold closed above 3,000 for the first time ever in Swiss francs. So there is no fiat currency haven, not even the Swiss franc. The Swiss franc might be a haven if you think in fiat currencies, but thinking in fiat currencies right now is a really dangerous, well, totally dangerous and losing proposition, I would say. I want to say there's still time if you've got a lot of fiat reserves in a bank or wherever, and you want to protect it, there's still time, I think, to get some physical gold and silver. I think this market is going to get really wild, and I think the premiums are going to rise quite sharply because we're going to see volatility. Um, and the other thing that I think is going to happen is that the futures market and LBMA, those markets are going to be on their knees because they've been suppressing the price and controlling the price for way too long. And now there's real physical demand for real gold and silver. And that's why ever since 2015, when I started this channel, I always said you need to buy the physical. If you want to defeat the bankers, you need to buy physical. And ETFs are no good. They're no good. They're just bankers like instrument to try to stay in control